Hey, David Wakefield here, and the question is, are you too qualified? So I had a client today we were chatting with, and they were too qualified to apply for or to get down payment assistance program, and it got me thinking about other loans where someone might be too qualified. So for state and county programs, there generally are going to be income restrictions for certain loan products such as Home Possible and Home Ready. There are income restrictions in most cases. And in this case, we're talking about USDA. Now, USDA does have geographic as well as income restrictions, but specifically, if you are within the income range and you're buying a home geographically that is okay with USDA, you still may not qualify if you could qualify for traditional conventional credit. So what is traditional conventional credit? Well, if you're able to put down 20% of your own money and cover the closing costs associated with that 20% down payment and the purchase of that house, and you are able to have debt to income ratios of 28% front ratio, 36% back ratio after you put down the 20%, then you're not going to be eligible for a USDA loan. So the borrower may or may not be eligible. You, as a borrower, may or may not be eligible for USDA, even if your income says you're within the range, and even if geographically you're within that range. Now, assets, now the 20%, to try to come up with the figure to see whether you have the financial wherewithal to have the 20% down plus cover the closing costs of your own admission there, is you've got to look at checking and savings and stocks and bonds and mutual funds and CDs and money market accounts. All that stuff comes in. What doesn't come in are IRAs. What does not come in are 401ks. So retirement accounts are not going to be factored in because they don't want to force you to pull money out of your retirement account in order to qualify. So hopefully that's information that's useful for you. And by the way, owning land doesn't count as an asset either. So if you have raw land, then that's not going to be considered an asset in that case, and you could qualify. So USDA, excellent program if you're eligible. Generally, most people that are going to be applying for USDA, they're doing it because there's no down payment. There's the reduced mortgage insurance. There's a lot of good reasons to go USDA, but if you make too much money, you don't qualify. And if you have too much money, you don't qualify. So anyways, hopefully that all makes sense. Any questions you have about USDA, down payment assistance programs, or any other mortgage matter, please reach out and let me know. Sorry, this was a little long-winded, but I thought that was information that I felt like I needed to share. Thank you so much. Bye for now.